Hi, I'm Magnus Lind from Treasury. We are planning for our trip to Washington next week to meet with the Federal Reserve. We are a bit lucky in our timing since it's going to be a bit turbulent with the fiscal cliff or budget sequester in the US, and we have the Italian election last weekend. One of the peers coming is Peter Lay, an award-winning group treasurer from British Council. Hi Peter, what are your expectations for the meeting next week?
Thanks Magnus. I'm very excited about the meeting next week. It's not often you get the chance to come and ask questions direct to the Federal Reserve, so it should be fascinating. I think from where I'm coming from and representing my interests, at least the banking interests for the British Council, is we're a charity, we're the UK's largest charity, and we are operating in 110 countries. We are not dissimilar to the Foreign Office, which is operating in 180 countries, and interestingly Diageo, I believe, is in 180 countries as well. So whether you look corporate, or whether you look charity, or whether you look public sector, these are organisations operating on a broad overseas base, looking for great banking infrastructure. And I suppose the point and the question I have, and something that I've been watching with quite close interest, is the extent to which US regulation, so what I would call the Enron knee-jerk reaction, the reaction to increasingly looking at the large international banks and their transactional activities, the fines and the penalty regimes that are being put in place, the level of bureaucracy that is being introduced, and I have to say, with legitimate reason, but the extent to which those decisions are being taken by regulators and are actually stifling the opportunity for Western banks to participate overseas and compete with banks in other parts of the world. So I'm thinking particularly here of China. The way in which these regulations are stopping the banks from supporting private enterprise, from being able to invest, for instance, in the mobile banking technology, the ability for which they might be able to work with charities and development organizations who are operating in places like South Sudan, who are trying to deliver their operations on the ground. And I'm thinking here of Oxfam, Mary Stopes Foundation, Plan International, Save the Children, massive organizations who are operating in already difficult conditions. So my question to the Federal Reserve is, do we think that we've gone a step too far in terms of regulating banks? To what extent can we relax these controls that are in place through perhaps the better use of biometrics, the better use of customer identification? How can we work more collaboratively? Because from what I can see is you've got informal sectors emerging. The example I would give would be in Africa, in sub-Saharan Africa, where we're seeing the customer base who come to the British Council adopting mobile banking. We're seeing the recent Sahel project. So the World Food Programme is working with the EU Commission in Niger, and it's supporting 9 million people in terms of poverty and ensuring that we don't have a major humanitarian crisis. They are using mobile banking technology to push funds out directly to people. Now the piece that's missing for us as an organisation is a banking response, or the banking ability to be able to provide mobile banking for our customers, to give us the KYC, and at the same time for us to be able to deploy funds out. And I don't think that as a global organisation where we have an educational product, an educational offering, and we're also doing project activity with the EU, etc., that we are that different from the corporates. And I have a feeling that a lot of these regulations are stifling, in fact I don't have a feeling, I'm pretty sure, is stifling the Western banks, I'm talking about the major international banks, from investing in this technology. We've already seen since 2008, for instance, that the banks have withdrawn from credit acquiring. They have moved it off. Now I understand there was a balance sheet issue here, but they've moved it off. They've said it's too expensive to invest. Well, if banking isn't dealing with customers and receivables, what is it dealing with? So to some extent I think that we are shooting the banks in the foot.
I agree. We see that. I see that with a lot of peers, and it's quite clear that the regulation is forcing the banks away from the customers. We know that even some central banks talk about disintermediation of the banking sector. We talk about large corporates saying we need to disintermediate because the banking sector cannot deliver anything to us. At that same time, yesterday or the day before yesterday, your new governor of the Bank of England is coming from Canada, Mark Carney, I think his name is saying that the banks has to be more customer-centric. But how can they be that with the regulation who makes the banks
and the cost
figure-centric?
and the extraordinary cost? And there is no doubt, and I won't name specific banks, but there are some American banks who are less willing to partner and provide services. Certainly in the OFAC countries, it's very difficult for American banks to operate in that space. But at the same time, they're not investing in some of that infrastructure because the penalties are too onerous, and they can't afford the reputation risk. So to some extent, there has to be a collegiate and mature discussion between major corporates, major development organizations, to be able to support the banks, to provide the infrastructure so we can grow in terms of business and we can grow in terms of what we're trying to deliver.
Yeah. Thank you, Peter. Very interesting. Looking forward to next week.
Thank you very much and appreciate it.
Thank you.